Okay, students, what I'm going to do today is talk about 4 different scenarios that we might have in using the allowance method of writing off bad debts. Okay? In order to do that, I'm going to use some information in an exercise from the textbook, so let me give you the information first. At the end of the current year, the accounts receivable account has a debit balance of $6,125,000 and net sales for the year total $66,800,000. We are to determine the amount of the adjusting entry to provide for doubtful accounts under each of the following assumptions, and the first one is A. The allowance account before adjustment has a debit balance of $18,000. Now we know that the allowance account is supposed to have a credit balance because it's a contra asset account, but it can have a debit balance if more bad debts are written off during the period than we have allowed for. That's when you would have a debit balance. So in this case we do have a debit balance of $18,000. Bad debt expense is estimated at 3/4% of net sales. Okay? So we're going to calculate the percentage of net sales. $66,800,000 times 0.0075, that's 3/4%, equals $501,000. Now we know that using the percentage of sales method, we're going to use the actual calculation, the amount that we got from the calculation to make our adjusting entry. So we're going to debit bad debt expense for $501,000 and credit the allowance for doubtful accounts of $501,000. Okay? Having to run those together a little bit because of limited space, but of course the debit's on the left and the credit is on the right. Now it does not matter when we make this journal entry using the percentage of sales method what the balance is in the allowance account. We're simply going to calculate the amount and make the adjusting entry, and then we will post the entry to the account. So that's a credit of $501,000. Okay? All right. So we know we have a debit and a credit, so we have to take the difference. And we get our balance, and we end up with a credit balance of $483,000. Now that's the balance, but our adjusting entry is the $501,000. Okay. All right. The second scenario is B. The allowance account before adjustment has a debit balance of $18,000 again, and an aging of accounts in the customer ledger indicates estimated doubtful accounts of $475,000. Now we're using the analysis of receivables method, and we want to adjust to a desired amount in the allowance account of $475,000. So let's go ahead and put that balance in. That would be a credit balance. Okay. Since we have a debit, we have to offset that debit first with a credit, and then we have to make the credit for the $475,000. So we actually have to add those two amounts together to get our adjusting entry. So our adjusting entry will be $493,000. I'll go ahead and put that in here. And in journal form, it is a debit to bad debt expense for $493,000. And a credit to the allowance for doubtful accounts for $493,000. Okay? So that's the second scenario. Let's look at the third one. C. The allowance account before adjustment has a credit balance of $10,000. Bad debt expense is estimated at 1%, or excuse me, 1/2% of net sales. So first we're going to multiply out our percentage of net sales, $66,800,000 times 0.005, which is 1/2%, and that equals $334,000. Now we know use the percentage of sales method that is the amount that we're going to put in our adjusting entry. So we will debit bad debt expense for $334,000, credit the allowance for doubtful accounts for $334,000, not even considering the balance that's in the allowance for doubtful accounts. When we post that entry, we will post it as $334,000 credit in the account. The balance then will be $344,000. Okay, so we will bring down a new balance, but we do not consider the balance prior to making the adjusting entry. All right, now the last scenario, D, the allowance before adjustment has a credit balance of $10,000. An aging of the accounts in the customer ledger indicates estimated doubtful accounts at $360,000. Again, we're using the analysis of receivables method, so therefore we want to adjust to a desired amount of $360,000. Okay, so let's put that in. $360,000 is the balance that we want to have. We already have a credit balance though, so we already have part of that in there. We need to end up with $360,000, so now we're going to have to take the difference to get our adjusting entry, and that's $350,000. Okay, so in the journal we're going to debit bad debt expense, $350,000, and credit the allowance for doubtful accounts for $350,000. Okay. I like to work this exercise because it does show the different scenarios and also shows what you do when you have a debit balance or when you have a credit balance. If you have any questions on this, let me know.